Let's start with the potential or the closure of the Strait of Hormuz. There's a huge concern globally. It's, of course, that key international waterway between Iran and the Arab Gulf states through which nearly 20% of the world's oil supply passes. Now, Trump has offered military escorts for tankers through the strait for oil and gas supplies. How vulnerable is this strait right now? And what could an extended closure mean for energy supplies?
Wow. Yeah, it's incredibly vulnerable right now, Sally. And so we've seen, as you mentioned, some of the numbers here, right? It's about a third of the world's seaborne crude exports pass through the Strait of Hormuz. We have seen the traffic basically slow to basically a halt there. And so you're seeing all of that crude being stuck in the Mideast Gulf. It's other commodities as well in terms of LNG with refined products too. And so you've essentially got this bottleneck, and that is only building. We're seeing different ramifications happening hour by hour here. So we woke up this morning to hear that Asia, some refiners are dialing back. There's talk about Iraq cutting back production because they simply are not able to export that crude. So this is having a huge impact here, specifically in terms of insurance being offered by President Trump and a naval escort out of the Strait of Hormuz. Yes, that may help traffic move, but it's going to take a brave tanker to go first, right, before the rest start following. And even then, there's still the risk of drone strikes, missile strikes. That's what has ultimately caused this traffic to stop in the first place. So we'll have to wait and see.
Right. Let's talk a little bit about, potential prices here. How high could the oil go if this conflict spreads further? And are we looking at a short-term spike or a sustained supply shock? And at what point will consumers really feel it at the pump, do you think?
Yeah. Well, we've already been hearing there how prices at the pump are starting to go up. The concern here is because it is such a choke point that if this goes on for weeks, we're going to see prices just continuing to rise here. And so if we look at history in terms of gasoline prices, we saw them on the national average peak out at about $5 a gallon. That was in mid-2022, sort of in the aftermath of the Ukraine-Russia war starting up there. Now, that's probably a good blueprint. So if this continues to be blocked essentially for a week, 2 weeks, then we could see prices fast approaching that kind of level.
And we know that a coalition of OPEC nations has agreed to boost output by a larger than expected amount to offset any shortfall from Iran. How much spare capacity does OPEC realistically have?
It's really only held by a few members. So if we think about Saudi Arabia, they have maybe 2 million barrels per day of spare capacity. You have United Arab Emirates that has maybe close to 1 million barrels per day there. Kuwait has some, but that's about it. And so the challenge is they can increase production all they want at this point, right? They can't actually get it out of the Strait of Hormuz here. And so that's the biggest challenge faced. So it's quite the predicament.
Yeah. And of course, let's just touch on global trade. Are we looking at disruptions in the Red Sea? Which industries are most vulnerable?
Well, everything that is being shipped out of in terms of container ships, right? If you're going to be going around the Red Sea, the concern on that side of things is that you have Bab el-Mandeb, where the Houthis are, and so they are somewhat aligned with the Iranians, and so we could see the pick back up in terms of those the targeting of vessels going through there. But ultimately, yeah, trade concerns are going to come into this if there is not a secure waterway in the Middle East there.
Matt, if you were to give us a worst case scenario, what would that look like? Could this trigger another supply chain crunch like 2021? What should we expect if this conflict escalates further? And at what point does geopolitical risk become a sustained drag on global GDP?
Yeah, sure. I don't want to scaremonger, Sally. That's the thing. But realistically, as I mentioned, if this goes on with the closure of the Strait of Hormuz for 2 weeks, we're likely to see oil prices at levels that we have never seen them at before. That is the worst case scenario here, right? From an energy perspective, and that's going to have severe headwinds for the global economy. But ultimately, if we do see this essential war dragging on for weeks and months, that's an even worse situation, right? And so I think President Trump is aware of both of these things. And so that's why we are seeing Iran frankly being pummeled here as to try and push them into submission and reach those goals, while at the same time he wants to get the Strait of Hormuz opened up as quickly as possible because he wants to be seeing oil prices back down, because he wants prices at the pump lower as he heads into the midterm elections here.